Hi, we're back with mortgage rate extraordinaire, Jon Spurr. We're here on the I Am Real Estate Show. You are here with Ray Smith and Sandra Johnson. Before we get started, you said a lot of good things these last couple of segments. How do people get a hold of you? Because I want to make sure they understand, and we'll bring it up at the end of the show also.
The best way to get a hold of me is on my cell phone, 520-247-3610, or Jon, Jon, at theilgroup.com.
Individualism. It seems to be the thing that, to me, that's the focus of what you do. Your loans are not for every single person. Each one is done individual.
I mean, I've asked you this before, Ray. Do you like being told what to do?
No, I do not.
Yeah, exactly. I don't either. And when you're making the biggest investment of your life, I don't think it should be me telling you as the loan officer or the lending expert that this is what you're going to do. I need to ask questions. I need to learn who you are. I need to find out where you are in your financial life, and then give you options.
I think how long you're going to hold that property makes a difference as well. I mean, there are so many things that you look at when you're working with our clients.
Absolutely. I mean, something as simple as solar panels can make or break a deal. I mean, we've had a deal fall apart yesterday because of solar panels as a loan instead of a lease, and there's a very big difference between solar panel loans and solar leases.
You know, you bring up a good topic. We are going to have someone come in the near future to talk about solar, but I don't think people understand how detrimental that lease can be.
Absolutely. It's borrowed money that is actually secured by your home, and when you go to sell that property, it has to be dealt with. It has to either be transferred to the new buyers, it has to be paid in full, but it has to be dealt with when you go to sell that home. The other thing I think people don't understand is one of the things that is told you put solar on your home, it increases the value of your home, but it only increases the value of your home if it doesn't have a lease on it or a loan on it. Appraisers cannot include it in the appraised value if you don't own it outright.
Yeah, and we're not talking a bit of a lease payment or lease balance that's due. A lot of these homes have $30,000 to $50,000 that's owed against the solar, and that's a huge thing to ask a buyer to take on, because you now have to qualify for that much more. And like I said before, a lot of people are shopping kind of at the top of their range of what they qualify for, whether that's a price sensitive decision that they're making because they know what their monthly payment is that they want. When you start tacking on that additional cost, that really does complicate the real estate transaction.
The other part of it is we're doing a purchase, and so you put 10% down. You're 90% loan to value, 90% of the value of the home. Well, I have to take into account those $30,000 solar loan. Well, that $30,000 solar loan is a second lien, or lease is a second lien, puts you over 100% loan to value, and we can't do the loan. And that's what we're up against right now, is their combined loan to value of the two loans is higher than what the loan program will allow. And I don't think people understand that it affects how we approve and process that first mortgage.
The loan that you get you have to have for the solar, do you have to have it from the same loan company to make it simpler to do it that way?
When you're selling the property, the lease or the loan is going to transfer to the new person and stay with the same company.
Wow. I did not expect that.
Yeah, they're just basically assuming the balance.
Assuming the payment. Yeah.
Well, we had a couple of properties that we asked you to run some numbers on, and one of them is in Corona de Tucson. It's 710 East Blue Mesa Place, and that actually qualifies for USDA financing, which could get a buyer in with zero down.
That's correct. The people that certify your beef also loan money on houses. So
that's the way our government works.
That's the way it works, right? So I ran some numbers on that on a USDA loan with your taxes, insurance, everything in it.
And what is the purchase price that you ran on this scenario?
I ran $400.
Okay.
Your taxes, insurance, all in, a payment on that on USDA would be $2,800 a month. VA, where again a VA buyer would have no money down, they'd be at $2,880. And I mean, it still qualifies for conventional financing, and I can still get rates at 6.25%, 6.5%, and with 10% down you could look at about $2,600 a month for that house. And I love that. I've looked at it multiple times. You've asked me to run numbers on it. I love that house.
It
I think
is
it's a
a
great
gorgeous
property and a
house.
great location.
Yeah.
It really is. It's a 3-bedroom, 2-bath. And what I really love about it is just how open it is and very light and bright. And then it has view fencing in the back. So you have really nice unobstructed views with a large wash area behind the house. So really nice property. And then the other one I asked you to run was at a purchase price of $232,000, and that's in Academy Village, and that's a 1-bedroom, 1-bath, with also has some great views, and it is a 55 and older community. And so, what were the numbers that you ran on that one?
So I just had a chance just to do a VA, and we have a lot of retired veterans out there that are trying to find some affordable housing, right?
Right.
And this is a great, again, I love this property. It's a great place. But on VA, you could get into that house for $1,637 a month. That's taxes, insurance, loan payment, everything.
And it does not include the HOA fees. Let me be
I didn't see
clear
what
on
the
that.
HOA fees
Yeah,
were,
so
but-
you do, it's such an interesting community because as it's named Academy Village, they have a learning academy that you, at age, I believe it's 65, you join the academy. So that's a per person fee to join that. But they do lectures twice a week. They have, I guess, cooking classes, and they have ceramics studio, art, games, all the things you would expect, the pool, spa, and exercise facilities. But it is really a unique community that has a lot to offer, but that does come with a little bit higher HOA fees. So those would be on top of the mortgage. So Jon, we're kind of wrapping up here again. Would you let our listeners know how they can reach you?
Cal, you can catch me on my cell phone, 520-247-3610. Email is john@theilgroup.com, or you can go to our website, inspiredlifemortgage.com.
A couple things that Jon brought up, I want to make sure we pinpoint some things. One thing he talked about was shopping around. Make sure you shop around, just like you would with a refrigerator, shop around for your interest rates. Also, shop locally. Make sure you're trying to use a lender that is in town. It makes your life easier. And when you're talking to loan officers, tell them the same thing. Don't make sure you go apples to apples. Don't try to do apples and orange. If you're looking for a $400,000 house, tell each one of those lenders you're looking for a $400,000 house. We'd like to thank Jon Spurr, one of our buddies from Inspired Life Mortgage, for coming on today and enlighten us again, like always does, with some good information about financing. How you doing, Jon?
Thank you.